Good morning. It is the morning of Monday, April 6th, and put together a presentation that covers the CARE Act, which we've had a lot of questions on. It's the big stimulus package that Congress passed, and we're starting to get quite a bit of good information out on it, and thought it would be something that would be good to share with everyone so you can get a good idea of the basics of what the stimulus plan includes. It's pretty comprehensive. And so what we're going to do today is just talk a little bit about that. Later on this week, we are going to do some other videos. One of them I'm going to do is on why it is so difficult to time the market, because obviously we all wish we could do that when we experience the pain of those quick major downturns, but we'll talk more about that. And we're also going to put together just a quarterly financial review over the first quarter of 2020. When you look at the things that have happened, things were going very well, and all of a sudden with the coronavirus, things change very quickly, and we've all seen that and living it, frankly. And we are looking at some options to be able to do that even in a webinar format, so which would be something live. We haven't done that before, where you could ask questions during it, different things like that. So we'll see where that goes. But to get started today, let's go over to our presentation, and it's just going to be the CARES Act overview. And so as we get into this, some of the key areas that we're going to cover are the recovery rebates, which you've probably heard about. When am I getting my check in the mail? We're going to talk about some of the tax and retirement provisions of the bill. Also the unemployment benefits, which they've made some pretty significant changes in that area, which should be really helpful for the folks that are stuck home and can't work and can't get paid their normal wages. We're going to talk a little about some of the business provisions. We won't go too deeply into that just because it has a limited impact on many of the viewers, but we do have that information, and we can talk one-on-one with people that does affect. And then some of the other provisions that exist with the bill. Now, one of the things that I do want to talk about briefly is that, remember, we are not attorneys, we are not accountants, so many of the things we talk about, really you need to talk to those professionals to see how they affect you. And so don't just jump into taking action from a simple presentation like we're doing today. This is really just for information, to get you some updates on what's going on. So just a little disclaimer for everybody out there. All right, let's talk a little bit about the recovery rebates. First of all, they're estimated to reach over 90% of taxpayers, so it's going to have a far-reaching effect on most people out there. More than likely, it's going to be this isn't more than likely, this is fact, it's going to be a refundable tax credit for 2020. So what a refundable tax credit is what that means is even if you got to a point where you paid no income tax because your income was below those thresholds, you still get this money. So it's not something they would take back from you at that point in time. So for individuals, it's going to be $1,200, and then for couples, $2,400. Pretty simple math, just multiplied by 2. And then if you have children under 17, that's generally going to be $500 per child, okay? If they've turned 18, even though they're living at home, a lot of people ask that question. That does not apply. So let's talk about some of the phase outs. So for married filing jointly, which is a lot of people out there, once you get to $150,000 of income, it's going to start phasing out. For a head of household, it's going to be $112,500, and you can refer to your tax return to see how you filed in the past, your prior tax return, and $75,000 for other filers, as you can see. The phase out is where it gets a little bit more complicated, but once you reach those limits, it's going to be reduced by $5 for every $100 of income over those numbers, right? So if you do the math, for every $1,000, it goes down $50. For every $10,000, it goes down $500, and so on and so forth. So you can do that math to get some idea where you fall if you're above those phase-out limits. One of the things they've said is they're going to base it on your 2018 or 2019 tax return. So a lot of people have not done their 2019 tax return yet, just because they haven't had a chance to, with us being with our stay-at-home orders and everything. So they will go off the 2018 numbers. And from what it sounds like, you will not be penalized if your numbers are higher in 19 than 18. And so don't worry about that. They're not going to come back and hit you after the fact. So one of the other things that are included are tax and retirement provisions. So these are distributions from your retirement accounts. Most people are aware that distributions are limited in some regard without penalty until you're 59 and a half. Once you're 59 and a half, the penalty goes away and you just have income taxes on those distributions. Well, they are making a temporary change on that, which will allow up to $100,000 combined. So if you took all your IRAs, employer plans like 401ks, 403bs, up to $100,000 total can be distributed in 2020, but it has to be for a specific reason that's related to the coronavirus, right? So it can't be just because hey, that's a good idea, let's get some of that money out. It has to be related. So someone in your family generally has to have had it, or you've just been affected because you can't work due to the coronavirus. It's pretty broad from what I've read. I'm sure there'll be further guidance on that, but it is pretty broad. Couple things. Number one, it's exempt from the 10% penalty, like we talked about. It is not subject to mandatory withholding, so that applies to employer plans. So if you have money in a 401k, generally if you take a distribution, they are required to withhold 20% federal income tax. And in this case, they are not going to be required to withhold that, which gives you more dollars in your pocket immediately. One of the nice things, it is eligible to be repaid over 3 years. So it's you can actually think of it somewhat as a rollover back into the plan. So if you took that money out, you could put it back in over the 3 years, and as you put it back in, could get some tax relief from the original taxation of that distribution. And it is taxable, like we talked about, but it can be spread over 3 years. So for many people, that could kind of reduce the burden of taking a bunch of money out at one time. Now, it doesn't have to be spread out, so you can claim it all in 1 year if you like. If your income is quite a bit lower this year due to the coronavirus, that may be a good planning option for you, right? But, the one thing I'm going to caution everyone on is this should be something that should be a last case scenario. And the reason is that you generally don't want to take funds out like that when your accounts are down due to a market downturn. If you have to, you have to. But the reality is you really want those in that account when the recovery happens so you can gain back the money that you lost with the downturn. So something to keep in mind. There's another part of it that's actually has to do with loans. So loans on qualified employer plans generally have been limited to either $50,000 or half of your vested account. Now they're increasing those from 50 up to 100,000, and also you can use 100% of the vested account versus just 50%. So what that means, if you had 100,000, you could take 100,000, where before with the 50% vesting, you'd be limited to half that amount. And loan payments can be delayed for up to a year, which can give some relief. So this is similar to what we talked about with the distribution above. It's just slightly different because it's a loan, which is not taxable at all, but you do have to pay it back to avoid the taxation. Here's a big one too for everybody that's retired out there. Now, if you saw in December, the required minimum distribution age changed from 70 and 1/2 up to 72. Now, it's a little confusing because if you started last year, so say you're 71 and you took your first one last year, you would have had to take your second one this year. But they are actually suspending all required minimum distributions moving forward for this year only. And so it doesn't really matter what age you are. So if you're worried about having to take that money out with the market being down, that is not going to be the case this year. Now, you still can take distributions, but you're not required to. Now, a couple of notes on this. It also applies to the stretch IRA required minimum distributions, which are things that would occur if you inherited an IRA and you were taking distributions each year based on your lifetime schedule. That will not apply any longer. And if you're using the 5-year rule on an inherited IRA, they're going to basically ignore 2020, so it won't count towards that. So some nice relief on money that we generally have to pull out of accounts that we're not going to have to do this year, which will help you from a tax standpoint. The next thing that came up was what they call an above-the-line charitable deduction. So many of you know with the most recent major tax changes how the standard deduction was increased. So many of you were able to itemize before, including many of your charitable deductions, house interest, things like that. And now you're not able to because even if you add all those things up, your standard deduction is actually higher. So what that means, generally speaking, is that if you are giving money to charity and you're using the standard deduction, you really didn't get a tax benefit for doing that. Well, there's a new, for this year, a $300 above the line deduction. And what that means is that if you're using the standard deduction, you're still going to get credit for that up to $300. Now, it does have to go to a qualified 501c3 charity. Can't go to a donor-advised fund or something like that. And it does not apply if you're itemizing. And the reason it doesn't is because you'd already get to claim that if you're able to itemize. So it'll basically would make it so you could claim it twice. And so obviously they're not going to do that. Anyway, so that's just something new on the for charitable deductions, which is a great little extra that's been thrown in and it will help some of the charities out there. Here's a big one that a lot of people have had questions about is the unemployment benefits. So what we have pandemic unemployment insurance. And what that is it's basically going to give unemployment benefits to people that would not be eligible otherwise. So if you're an independent contractor or something like that where you don't get regular wages, but your income has been cut because you're not able to go to work, this will apply to you. So it's something they need to check into, but it's going to be a really big benefit for those people that normally would not be able to get it. They're also eliminating the waiting period, so the federal government's actually going to cover the first week, which is great because before you'd have to wait. And they also are providing what would be called bonus checks, which are your regular unemployment benefits, but they're bumped up by $600 per week for up to 4 months. So that's a really substantial difference. I believe unemployment's around $362 a week is what the number is right now, maximum. So if you throw that $600 on there, it's up to $962 a week, which is a really nice benefit to help people get by until we can all get back to work. By the way, on that, just one other note on that. I know in the state of Michigan, the website's really been bogged down, so be patient on that. And they are even going to a schedule based on your last name of which days you should go out and try to apply if you're in that situation. A couple other benefits. They are extending benefits for 13 extra weeks to make sure we can get through this. And they are also giving an incentive for those companies that are trying to keep people on but need to reduce hours somewhat. So they are going to have some unemployment coverage for people that are on part-time that would normally be full-time employees. So really a great extra set of benefits for people in that situation, which should really be helpful for us getting through this. Now let's get into some of the business provisions. One of the first things, the Paycheck Protection Program. This has been on the news. A lot of people have been talking about it. So these are smaller companies with up to 500 employees. And what these loans are doing is they're providing extra money to pay people while you have a downturn in your business, right? And many of these loans, if used for certain things like payroll, utilities, do not have to be paid back. So they're very, very popular in the press. Lots of people have been talking about them and should be really helpful for those companies that are being challenged on a short-term basis with these shutdowns. The next thing is the employee retention credit. The other thing that they're doing is they're giving you credits against your payroll taxes if you are keeping people on and trying to avoid laying people off. So I know a lot of you are probably familiar with this, but when you look on your check and see your FICA deduction, your Social Security and Medicare, what you're seeing on your check generally is 1/2 of that total amount. Your employer also pays that same amount into the system each year. And so what they're saying with a credit against those taxes is employers might get a bit of a reduction there on some of those taxes on a short-term basis if they're keeping people on. Okay, and the other thing is a general deferral of those same payroll taxes. So generally you pay those as you go throughout the year. And what they're doing is they're allowing you to defer some of that cost where you pay half of that by 12/31 of 2021, so a year and a half out, or a little more than that, and then the other 50% by 12/31 2022. So they're really allowing the business owners to spread out that cost a little bit. Some of the other provisions that exist, we've got student loan help. So a lot of people have interest in that because, I mean, if you watching this, you may not have student loans, but maybe your kids do. So they are actually allowing payments to be deferred until September 30th, 2020. No interest is going to accrue during this period, so that's a good thing. It's not like some loans where you don't have to make a payment, but interest will accrue. And it still will count towards your loan forgiveness if you're in one of those programs, depending on certain occupations, or if you do it for so many years, some of those loans are forgiven. This clock's still going to be ticking, so it's not going to hurt you in that regard. Now, one of the things that's really important, payments can still be made. So it is a good opportunity if you're able to keep making your payments. Your payment will now go 100% towards principal instead of, that part going to interest, part going to principal, so you can pay that down a little quicker. And also you have to be proactive to stop those payments. You need to reach out and let them know you want to take advantage of that. That doesn't happen automatically, although from what I have heard, it does sound like the interest part of it is happening automatically, meaning it's going to 0% for these next couple of months. So that's a really important thing for people that are struggling with their income during this and still have those student loans that they're paying on. Couple other things. We've got healthcare related items. So this isn't any major change, but it is something that exists out there. So the definition of medical expense has expanded. So those people that have health savings accounts, and there's a few different names, medical savings accounts, etc., they're now going to include over-the-counter medications. That's a little bit of a benefit that you can use that money towards those things. And also expanded to include menstrual care products, which is a new part of that bill. Some other changes, Medicare beneficiaries, people that are 65 and up on Medicare, they are going to receive no-cost COVID-19 vaccine shots when that's available, which is great because obviously any way we can reduce costs in that area are wonderful. Part D recipients, the drug plan can request up to 90-day supplies of medication, which is new, right? In the past, that's not something that they could get 90 days at a time. And telehealth services are temporarily covered by high health savings account eligible high deductible health plans, which were not in the past. And so telehealth meaning that some things, kind of like online FaceTime where they're not face-to-face with a doctor, but they can serve you that way temporarily, which will be great. Okay, so basically, that's kind of a rundown of some of the big changes that are occurring through that bill. And like we were saying earlier, if you have questions, don't hesitate to reach out. We're available. We can talk with you through those things. There's a lot of great resources available to help you understand those things better. As we said, we're going to be coming on with some other videos this week to help you get through this period of time and help you understand your money better. But for the short term, I think these will be really helpful for a lot of people. It's going to be nice to get some of that extra money in your pocket, have those extra unemployment benefits if you're in that case where you can't work or your hours have been reduced. Some of the areas with the small businesses and the healthcare changes are all really positive. So I think we all should be very thankful that those things are going to be available as we move forward. As always, don't hesitate to reach out with questions. We're here for you. And everybody out there, stay safe, and we're looking forward to getting through this. Thanks so much.